People are still looking pretty upbeat when it comes to the rest of the year. How are you viewing the second half right now, and what are some of the key themes you're going to be watching out for?
Yeah, we're looking overall at economic activity. As it keeps improving, we think that the market should hold. We've obviously got a keen eye on these virus cases in the US as it translates to economic activity, but overall, we still own and have owned some of our key stock positions and are happy to hold them into second half. We are on the page of owning quality, and we think that the recent virus increases will see that these stocks do perform better relatively given their resilient business models.
Yeah, just looking at your stock picks, they're very much Asia tech based or Asia tech focused. As technology shifts, given this coronavirus, how are you well positioned now among kind of the changes we're seeing in technology? Do you focus still on 5G, cloud tech, or do you look more on the consumer side like e-commerce and food delivery apps?
Well, we have a few on the 5G space. We are looking, or we own NEC Corp and Fujitsu in Japan. There was positive news out last week that NTT, the Japanese telco, took a 5% stake in NEC Corp, and NTT operates worldwide internet network. So that really endorses NEC as a 5G player within Japan, and also potentially to take market share outside of Japan. And we're also looking, we have one of our key calls is Ping An Good Doctor, which is a play on the digitalization of healthcare sector as they do online consultations. So that's a real structural opportunity there. And we like the games and the music sector. So a little bit more focused on those areas within the tech and internet space.
Claudia, your views on Tencent. Of course, it was a big corporate story last week, given that it broke through 500 Hong Kong dollars a share. Pony Ma becoming the richest man in Asia as a result of that. As China gets back to work and that work from home phenomenon starts to ease here on the mainland, is there a concern that people are going to start switching off and that gaming and the stickiness around gaming is going to start to ease for Tencent?
Yeah, I think that's a key concern, and everyone's watching what happens. But on the weekend, you had Tencent's annual game conference where they gave updates on over 40 existing and new titles for the China market. And I think most notably, the digitalization, the mobile games. And you saw a launch date given of August 12th of Mobile Dungeon and Fighter, which actually aligns with their quarterly results earnings date. This game actually has, as of yesterday, got almost 60 million reservations from Chinese players, which is actually a record-breaking level. So there's some estimates out there that might monetize at $1 billion for the first year of annualized gross revenue. So I think there is some concern, but there is a lot of game launches coming up, and they have partnerships, which they gave details on, with overseas game development houses, notably Japan's Pokemon Company. And there's also been some news, I think, which is getting some attention on their Trovo Live, which is a competing product to Amazon's Twitch, which should support, I think there's a lot of catalyst for that to support the company into second half. However, the normalization of revenues into these upcoming earnings and the increased costs that are associated with new product launches, together with these technical levels, like you said, I think the share price bumping up against the 500 Hong Kong dollar level has been a key resistance level, as well as this valuation. We have seen it more expensive at the beginning of 2018, and I think it's not impossible that we can get there in the second half, given what we've talked about as the game catalyst as well as the liquidity. And retailers are quite active in this name, so we are quite constructive into the second half on Tencent.
How much success is NetEase having in monetizing its online education and music services?
Yeah, I mean, that's, we also are an owner of NetEase, and they have seen incremental improvement in the music subs. Commentary from NetEase and the key competitor in the music space, Tencent Music, have identified that the market now is a bit more of a duopolistic market between the two of them, and therefore much more rational. The paying ratio of music in China is much lower versus mobile games. So if we can get that paying ratio higher, it'll be much more profitable for both of those players, and we think NetEase will be a key beneficiary of that. And, as an example, if there's a key hit that's released, instead of the competitor releasing at a cheaper price, I think now the the thought is that they will release at the same price, and which increases the economics of the sector, of the industry. And so we're quite constructive and actually have just, have a position as well in Tencent Music on the basis of that, of just better improvement in the market rationality.
And Claudia, how are you viewing when it comes to Chinese regulators and the meddling we've seen so far? There seems to be the government is intensifying its scrutiny over user-generated online content. Just last week, we saw that they suspended some of these live streaming apps, some of the services which were backed by companies like Tencent. Is that a key concern for you?
Yeah, absolutely. I mean, that will always be a key concern. One of the most cited key concerns that you have for this sector is something that you have to keep a keen eye on. And the commentary from management on how they're addressing that and looking at it, I think they take it very seriously. But really, it's probably the highest risk. And, you really have to look at it in the sense of, which is why these technical levels are quite important at the moment, because the valuations are less important when things are going up, but when you start to factor in, well, if some of these risks materialize, you really have to stick to the valuation. So for institutional investors, it's a little uncomfortable here on the valuation level, and it's something that I think most people would have a keen focus on.